Hey, Brad Niccum here, Nest Mortgage Group. Hope everybody had a great week. Back at my wonderful desk here at home. We had a great time away, but it does feel awesome to be back home. You can tell by the background that I'm still here in good old Indiana. I was going to green screen it and make it look like I was still in Cabo, but hey, I figured I'd just get real. We're home. Hey, it's very rare that stocks and bonds consistently fall together and end the year negatively. And since World War II, this has only happened 3 times. Once in 1969, once in 2018, and if the year ended today, 2022. It would be the first time in history, though, that stocks and bonds were both down over 10% for the year. So that's pretty crazy to think about where we are. Now, every year following this abnormality that occurs, 10-year yields were lower. And then also looking forward in the past 2 occurrences, 1970, 10-year was down 18%, 2019, they dropped 29%. So it'd be a great drop in the 10-year, T-bill. So if we split that difference between the two, one could infer that we would see a 24% decline in the 10-year T-bill next year, which would bring the yield back under 3% and would then support rates around 5%. This coincides with the belief that a lot of people think that by the end of this year, we'll start to see interest rates start to fall. And once we see the inflation has peaked, which many may think that it just now has, everything should start going in a better direction for interest rates. Asking the question, where are rates today? For a high credit score, large loan amount with 20% down or more, rates could still be in the high 6s to very low 7s. Government loans with high credit scores also still fall in the low or high 6s and low 7s. And when I say high credit score, I mean anything over 640. If your credit score is below 700, then those rates will be quite a bit higher. So for a very specific rate call, feel free to call me anytime. We can talk about each individual situation. But knowing we go back to the saying, you marry the house, you date the rate, we have a lot of indicators that say, hey, interest rates are going to come down maybe in the fourth quarter, definitely the first and second quarter of 2023. So it's kind of an easier sell to go ahead and buy that house today, stop renting, and get that interest rate refinanced when rates come around. Hey, we're still closing loans in 24 hours. For underwriting, 24 hours for clearing conditions. All loan types, we're closing those in less than 30 days. If you have a home that gets a appraisal waiver, which we do that before you write the purchase agreement, closing those loans in less than 15 days, as quick as 10 days with no appraisal at all. And we did just get a loan cleared to close from application date to closing with an appraisal in 16 days. So we're doing this really fast. So still potentially could pull off a deal in October. Definitely pull off deals in the 1st of November. So if you've got buyers that need to close fast, let us know. We'll get it done. If you don't know how to get that waiver before you write an offer, reach out to me. We'll talk about that. And then remember, pre-approvals, 7 days a week, and 1 hour pre-approvals. Call me anytime. I didn't miss a beat in Cabo. Got everybody called and everybody pre-approved in the same day within an hour like I normally do. So now I'm back home in Indiana, and since it's gray and cold out, there's not a lot to do out there anyway, so I'd rather just do pre-approval. So call me if you've got one that you need to close fast or you need to close whenever. Great rates, everything still stands. Look forward to talking to you soon. 317-538-9825. Brad Niccum saying, see you next time.